earnings, IOC posted a disappointing set of numbers. Unlike some of the other OMCs that we saw plenty of cheer in, profits shrunk by a massive 80%. Veena did catch up with Chairman B.Ashok. Let's listen into what he had to say.
Let me mention that the GRM for the fourth quarter was $3 a barrel, but our GRM for the entire year is much better. But since you are focused on the last quarter, let me mention that in the last quarter we have had quite a bit of an inventory loss. In fact, our Q4 inventory loss has been 3,335 crore as against 871 crores during the last year fourth quarter. But let me also add that we have had an outstanding year. As a year, we have record profits of 10,399 crores as against 5,273 crores for the whole year last year, which is more than almost double of what we have done last year. And when you look at GRM for the whole year, we have a GRM of 5.06 as against 0.27 during last full year. And if you back out the inventory effect, our GRM is $7.5 a barrel as against 6.73 last year, which is again an improvement. And if you back out the inventory effect during the current quarter, that is the fourth quarter, our GRM is 6.01 as against the $3. So I think we have done well, and the impact has been more due to the fact that we have had a huge inventory loss during the fourth quarter as compared to fourth quarter of last year.
Sir, also your refining margins might not hold at these levels that they are at this point, and they're likely to soften over the next two quarters. With that regard, what's your take on your margins?
No, let me say that refining margins have been pretty good otherwise. In fact, the cracks have been quite exceptional as far as gasoline is concerned during the last year. But the diesel cracks have been highly volatile. There were periods when the diesel cracks were very low. So these have actually contributed besides the inventory drop, the drop in inventory, as I said. But moving forward, I think so far the indications are that the refinery margins are quite robust.
What about your marketing margins, sir?
The marketing margins have also been steady during the year. Of course, we have had some dip in marketing margin during the whole year. I mean, that has been a consequence of certain things. We had to import a lot of product to make sure that the robust demand in the country, which is much more than what was anticipated, was met. And because of that, and due to the large number of vessels which are coming in, there were certain issues in terms of the demurrage charges which we had to pay. But overall, I think it has ensured that our volumes have gone up substantially during the last year by more than 4 million tons. And overall, we have been also able to maintain our leadership in the marketplace.